I'm trying to start a business. How much can I save on taxes? What can I do to save on taxes? I tell them, listen, first, let's start the business and let's start generating some revenue. That's the most important part. Let's focus on the revenue. Of course, you don't want to pay Uncle Sam more than you need to. You're going to have that availability to write things off if you have a business. So let's start generating income because that's the reason you're starting a business. Let's not focus too much on saving this dollar and that dollar. As long as you're documenting everything properly, you're going to be in good shape. Let's start the business. Let's generate revenue, and then we can, take an overall look at everything.
What we know is, I got $1,000 credit card. That emergency is $870. Great. Here's this credit card. Put it on there.
Right.
What do you mean I'm paying 28% interest now on that money that I just borrowed? What do you mean it's going to take me the next 10 years of my life to pay that off? I just needed some tires.
Right.
I didn't know it was going to be that serious. I didn't know tires were going to take me the next 10 years of my life. God, this is what happens, right? I've seen enough of it in the bank. I've seen enough of it in my own life of just making mistakes and saying, if we just had a better understanding about what we're about to get ourselves into, we probably would have made better decisions early on, right? In 3, 2, 1, we gone. Welcome back, family, to another episode of the First Sip Podcast. I'm your host, Dekimbe Smith, and this week, again, I'm back with another First Sip alumni. Let me get that word right. My brother, David Colon. All right, now this is a time of year when I love to bring him on because he is my tax go-to. Any question about that with, filing taxes, whether it be on the business side, the personal side, he's the person I go to because you want somebody who's close, that you can go to with these questions, be able to look over your stuff and say like, okay, what should I do? Map out the plan for me, right? So just like how I brought on Josh, Jared, those other partners that I work with in my real estate business, it is somebody who I want to connect you guys with. So if you do have questions, like I said, you could always reach out to me. We can have a conversation and I can connect you with these people. But now you also have a direct line right to them, right? So you can see what a conversation is like between me and him. So I wanted to bring you guys that today. So David, welcome back.
Hey, Dekimbe, thank you so much for having me again, man. It's a pleasure. I think we're like going 3 years in a row strong, man.
Mm-hmm.
And I always get excited to have a conversation with you, to do another episode. Every year that we've spoken, something has changed. We've done bigger and better things. I think both of us as, personal individuals and of course, in our businesses. So, it's always a pleasure to be speaking with you.
Yeah, man, it is. Thank you again for joining me, right? Because I'm always happy to see, like you said, to see the progress over time and looking back, listen back on some of those episodes. I'm just like, damn, it really is cool to see the progress, with somebody like people who may be seeing this for the first time. We went to high school together, right? So it really goes back years now at this point. And like I said, when I see my brothers being able to build something for themselves and really being able to work and make that progress over time, it is a great thing to see.
Yeah, and not only did we go to high school together, we rode on the same bus for quite some time. So there's that intimate connection.
Mm-hmm.
Not only were we friends in the halls, but we had to wave, say hello and wave each other goodbye every day. So.
Yep, getting up there early in the morning, just sitting there like, man, why do we have to go to school this early? Exactly. This is ridiculous. We
freezing cold.
Man, don't even get me started because we're in the winter right now, and people know I don't like the cold. So that's a conversation for another time.
Exactly.
But like I said, today we're here to talk about taxes, right? Here to help people because this is a time of year when most people are going to be filing taxes, especially you're getting your W-2s, your 1040s, right? All that stuff to say like, okay, how much did I make the last year? And how much am I going to be getting back, from my taxes? Because that's honestly what a lot of people look for when it comes time to file their taxes, unless you're on the business side. And then it's like, wait, how much money can I try to save, from doing these things? So I want to have that conversation, dabble into a little bit of each of those topics here and there, and really just see, what your thoughts are for 2025 and help the people out. So let's get into it.
Let's do it, man. Let's do it.
Perfect. So before we got into it, before I started recording, I was asking you, okay, right now at this point in my business, I'm working with more buyers, more, renters who are moving into the buyer stage. And obviously people talk a lot about affordability, and being able to manage the expenses of buying a home. But also a part of the conversation that I realize people don't hear a lot because there's not a lot of education out there about it is the tax savings, right? From buying a home. So it's like, yeah, you might not be, you might have more cost than you would renting, but at the same time, on the backside, you're going to be able to save some money, right, on a yearly basis. So what are some things that you're seeing right now from the clients that might get referred to you right after they buy their first home? How are some ways that you're able to save them money within that first year?
Yeah, so the first year, depending on exactly when they purchased the home, you want to give yourself some time to accumulate that mortgage interest and, of course, pay a full year's worth of property taxes. So, one thing that home buyers have the option to do is that they can itemize their deductions, where they can write off the mortgage interest that they pay on their property and the property taxes.
Mm.
Now, let's say you own a home and you decide, it's been your personal home, you've been living there for at least 2 of the last 5 years. You're actually able to save money if you decided to sell your personal residence. You can qualify for an exclusion of anywhere from 250 to $500,000 on the sale of your personal residence.
Mm.
Now, that's just on the personal side of things. Of course, if you have a business ran through your home, that opens up a whole nother door. You have the options to set up a home office where you're technically writing off a part of your mortgage, property taxes, utilities, all as a business expense. And as well, when you go and sell the property, there is something that's called um, depreciation recapture, which
Hmm.
you have to report. But over the years, as you're working your business, it's definitely a helpful deduction. Now, if we're talking on like the rental real estate, that's a whole different situation. Rental real
Hmm.
estate, you're able to depreciate the property for 27 and a half years. You could always 1031 exchange your property if you decide to sell it. So you're not actually taking the capital gains. You're deferring those capital gains until you decide to invest it into another property. And if you decide to sell that property, you either take the capital gains or you can continue the 1031 exchange. So
Hmm.
a lot of real estate investors actually never pay taxes when they sell the property because what they're looking to do is sell the property and invest into something bigger.
Yeah.
So if let's say you're starting with a single family house, you could sell that property, invest in a multifamily, or if you're in a multifamily, you can start talking about maybe a complex. So you just keep the ball rolling. You're creating yourself cash flow. You have a lot of depreciation that you can lean on, and if you don't want to, you don't ever have to realize those gains.
Mm. Now, I know that might be a lot for depending on where people are right now in their situation. They may hear some of the things that you just said and be like, okay, that was a lot for me.
Right.
And I don't know, what some of these things are, right? Like I know he's talking about the deductions I can make, how I can itemize these things, but like I said, the more I'm having these conversations with people and the longer we're doing this, I think we realize sometimes that we may like talk about things with like our level of understanding and then realize like, wow, the majority of people really do need it simplified so much
Yes.
that we got to really like take it back to the point of saying, okay, we're talking about these, being able to itemize those deductions, but how should I even be accounting for that, right? How should I track that money over the year before it gets to that point now where I have to show you everything, right? And say, okay, well, I bought this home, but I didn't know I should really, be keeping track of these payments in a separate account. And, I didn't know I should be doing my personal spending and all these things together. So that's another thing I'm really diving in on this year moving forward too. It's really breaking down and taking the time to slow down on those things that we may just glance over and assume that most people understand, right? Especially with the terminology and those kind of things and say, okay, let's take like the average 25-year-old right now
Yep.
who might be buying their first home and saying, all right, I'm here, I'm 6 months in, 9 months into it, and I'm getting ready to file my taxes. Or let's actually rewind it back 3 months into it. How should I start tracking my finances, right? Like what's something that you recommend to your clients, especially if you see them messing up maybe at one point and saying, okay, going into this year now, right? We're at the start of a new year. I need you to start tracking your money like this. So when it comes time to file your taxes, this will be the best way to go about it. What do you recommend to people?
Yeah, so if we're talking in the sense of your mortgage interest and your property taxes, that's something you can easily talk to your mortgage company, whoever you have your mortgage out with, get a percentage of your monthly premiums, figure out exactly how much is going to interest, your mortgage interest, and how much is going to property taxes. Then you basically just multiply that for the full year or however many months you have left in that year. And you can kind of estimate what it's going to look like at the end of the year as far as the mortgage interest and the property taxes that you paid.
Mm.
Now, at the end of every year, your mortgage company is going to send you a Form 1098 mortgage interest statement. So that's going to have everything itemized and laid out for you. It's going to show you your hazard insurance, your property taxes, mortgage interest, um, all the necessary information you're going to need in order to claim that deduction on your taxes.
Okay. Nice. Nice. All right. And so, like, let's move into the next topic then, right? Because we were talking about investors and more so on the business side of things. And that is an area too, right? On the other side where it's it's more complex than personal life. And it is something that I personally have had to take a step back and say, okay, I have to really get my business documents, my business paperwork structured, because when I got started, I just jumped into it and said, okay, let me, start piecing together things as I go, because there's no real, well, at least I didn't pick up, any blueprint that said, hey, do these things first, to structure your business properly on the financial side, so that when it comes time to to get things financed, when it comes time to file your taxes, those things, you'll be ready to go. Because what you do realize is that, okay, if you want to buy a home and you're running a business, you're going to need 2 years of your tax returns, right, from your business revenue, showing what that looks like, because the lender is not going to trust you as much as they trust somebody who's working a job, who gets a W-2. So it's a major thing that you need to have under control, and it is a major thing I wish I did right, years ago. So now that's one thing I really wanted to focus on now for the business owner side. What is the recommendations you have for them when it comes to, things like accounting for your home office? Being able to say, okay, this is how much of my utilities I'm going to deduct on a monthly basis, and say this is going towards the business. How do you account for that side?
Yeah, absolutely. And you kind of hit the nail right on the head. Documentation is key in anything that you do with taxes. I mean, the IRS does not accept just bank statements, and they definitely won't accept your word. Everything does need to be managed, and there needs to be that paper trail and those documents to say, hey, listen, this was a business expense, this was a personal expense. And they do that because, listen, if you're paying something with a business card, a business debit card, business credit card, and let's say there's some business usage, but there's also some personal usage on there, they want to be able to determine, okay, listen, you're not taking this full deduction against your business because part of it was personal. So documentation is absolutely key. And not only for your own personal records and your business records to see how your business is doing, but also to properly protect yourself against any audits. If because audits happen, whether you
Hmm.
like it or not, whether you're doing everything correct or not. It's simply the government coming in and saying, listen, we want to make sure that everything is accounted for, that you're reporting everything you need to report. You're not over reporting things that you shouldn't be. So that's simply
Hmm.
what an audit is. But yeah, documentation, and like let's take the home office deduction. There's
Hmm.
multiple ways you can go about filing for that deduction. It is, of course, for your business. Now, a regular person, a W-2 employee, is not going to be able to take that particular deduction. You need to have a business operating outside of that specific area. Now, that area that you're using, it needs to be used regularly and exclusively for business. So it can't be your kitchen table where you and the family are eating. You don't want it to be, a corner of your room. I mean, it could be a corner of your room, but you're gonna have to measure it out and say, listen, this little section is specifically for my office. For those that have the extra space and can set up, a separate room, that would be highly recommended. So how the deduction works is you take the square footage of your entire property. So if you have a home, let's say you have a home that's 1,000 square feet. If you have, let's say, a spare room, let's call that 100 square feet. Now you're able to deduct the 10%, whether if it's your mortgage, your property taxes, or if you're renting, you can take 10% of rent as that deduction. There's another method you can do where you're going by the number of rooms that you have in your house, including kitchens and basements, and then you can, let's say you have a five a 5 room house, and one out of five is obviously your home office. Then you could take the 10% from there.
Yeah, that makes it a little bit easier to think about too. Now, when it comes to that, right, staying on that accounting side, because I really think that's the most important thing that people are going to want to take from this initial conversation, right? Guys, if it's a little bit more advanced and you're deeper than this, then this is where I say, okay, go ahead and reach out to them, right? Like further the conversation, because this is just to get you warmed up, right? Get you thinking, all right, where am I right now in my own process and my status financially, and what's the next step that I need to take? So, staying on that. A couple of weeks ago, I was talking to another guest, and Kalia from Sankofa Signings, and she had recommended the book Profit First. I don't got it behind me here, but are you familiar with the Profit First method?
No.
The financial. So it is. It's basically. I think it was Mike Michalowicz who wrote the book, and basically what he wrote it for entrepreneurs so they have a way of separating their money as it comes in, so that when it comes time to then do things with it, they know where the money should go, right? And one area he talks about is having an account specifically set up for taxes, right?
Absolutely.
So taking maybe 15-20% of what it is you're bringing in and putting it directly into that account when that money comes in. So is there another like margin that you tell people just to keep in mind? Because every business is going to vary, right? Depending on how much you might be able to save and whatnot. But is there a safe space that you tell people to stay within?
Yeah. So I haven't heard of that particular book
Mm-hmm.
that you just referenced to. I'll definitely take a look at that. It sounds like a regular budget,
Mm-hmm.
a method to budgeting and setting everything in its own specific account and separating everything.
Mm-hmm.
That's really really important when it comes to having a business, and of course your personal expenses and your personal income. You don't ever want to fall into the trap of commingling, because the government, like let's say you have a designation as a LLC, you have certain liability protection. Same thing with S corps and C corps. And I don't want to confuse anybody, so
Mm-hmm.
we'll keep it to like the LLC. um, you have certain legal protection against your personal assets when you have an LLC. That's the whole purpose of an LLC. It's not a tax saving strategy, it is simply separating personal and business liability. But
I'm
if
smiling
you're,
because I thought it was when I first got into this state. I'm
right,
just being honest here with you guys, okay? We're all learning here together as we go. So
and there's a
that's what
lot.
I thought.
There's a lot of people that come to me and say the same thing. Oh, I have an LLC. Can I
Mm-hmm.
write off this and that? You can write it off regardless if you're an LLC or not, because if you're a business, you can operate as a sole proprietor. So that's just meaning everything is flowing through you. Now, getting back to the example that I was mentioning, if they take away your legal liability and something happens, then now your personal assets are up for litigation in case
Mm.
of a lawsuit. So that's why people set up LLCs. So you want to make sure you um, operate within the confines of the LLC. So not commingling your income, not commingling your expenses. You want to, if you need to pay yourself, then pay yourself. Take the money out of the business account. You shouldn't be, using your business card for personal expenses. If you're going to pay
Mm-hmm.
yourself, go ahead, pay yourself. Um, and I believe I answered the
Yeah,
question.
yeah, definitely. I actually wanted to go back real quick too, because you brought up the idea of the sole proprietorship
Yeah.
and still being able to, file for deductions that way too. Is there a number that you tell people, okay, like, once you've gone past this in your business, this is when you need to convert over to an LLC? Or is it maybe how many assets they already have in their own life and say, hey, listen, I know you just, starting off maybe selling candles out your house, right? Or, food or, whatever it is, but you have other things that somebody might come for. So how do you have that conversation with them about then, filing those things?
Absolutely. Oh, and to answer your previous question, I would say around 30%, especially depending
Mhm.
on the state that you live in.
Okay.
If you're in a high tax state, you definitely want to be like New York, New Jersey. The taxes there are very high, so you want to make sure that you set aside at least 30% of your revenue for your
Mhm.
business for taxes. Now, if you don't use it all, beautiful. You can still, if let's say you already made the payment and estimated payments, you'll receive a refund. So that's a good thing. But you definitely want to set aside around 30% depending on which state you live in.
That's good to know.
Um, Now, your next question. What was your question again? I'm sorry.
Bringing it back to the sole proprietor, right? Like, at
Yes,
what point do they start protecting their assets?
yes.
Hmm.
So for me, my recommendation is always go for the LLC. Protect yourself. That's really really important. No
Okay.
matter what business you're in, I always say go for the LLC. So there's not a specific number that I would say, okay, you're a sole proprietor, you should start going into an LLC. There's not a specific number because, like I said, you can operate the same way in each of those.
Mm.
You could pay yourself. You're not going to run any payroll or anything for yourself, but you can still have payroll for your employees. When I would say to go from, let's say, LLC to like an S corp designation
Hmm.
is around $50,000 to $100,000 of net profits. That's
Profits. Okay.
yes, not revenue. It's going to
Hmm.
be based off of your profits.
It's a very different thing, people. If we haven't, said that enough, it's a very different thing. Okay, so we got to learn these things. Profit versus the revenue, right?
Exactly,
Not 50,000 in revenue,
exactly,
50,000 in profit. All right,
exactly.
moving on. Thank you.
You're
So,
very welcome. And I know,
because
and
yeah.
trust me, guys, I understand that this tax stuff is very confusing. There's
Hmm.
a lot of information. There's also a lot of misinformation. But taking this slow, getting the basics down pat, that's definitely the right way to start.
Yeah.
Not, I get a lot of questions like, um, "Oh, Dave, I'm trying to start a business. How much can I save on taxes? What can I do to save on taxes?" I tell them, listen, first, let's start the business and let's start generating some revenue. That's the
Hmm.
most important part. Let's focus on the revenue. Of course, you don't want to pay Uncle Sam more than you need to. You're gonna have that availability to write things off if you have a business. So let's start generating income because
Hmm.
that's the reason you're starting a business. Let's not focus too much on saving this dollar and that dollar. As long as you're documenting everything properly, you're gonna be in good shape. Let's start the business, let's generate revenue, and then we can, take an overall look at everything.
Yeah, that's a very real thing, right? That analysis by, that paralysis by analysis, when you're just sitting there getting so much information and not knowing which way should I move first, right? Well, I heard this person say this, and I heard this person say this. So, what should I do? And like you're saying, before we just go ahead and say, let's just start making that first dollar, or make that first phone call and see what the best step is to make. We just sit there and just get scrambled. We just get scrambled in our minds and go back and forth and just hope that one day we'll just figure it out, right? Like the blueprint will just be in front of us, but it really isn't that easy, and it's really just going to take you just getting into it, messing up maybe once or twice,
Right.
and learning from that. But one thing we want to avoid through these conversations is messing up too much, right? And not getting too far into a hole where now you really are panicking and saying, I don't know what to do, because that is what happens with people. And one thing we were talking about before this episode was the concept of life insurance, right? Because that's something that you also advise your clients around. And it's something that I was working with before too when I was in the banking and financial services. So life insurance is something that unfortunately a lot of people don't talk about until it's time to talk about it. And like I said, we were just talking about protecting your assets. Having an LLC is great and everything, but what if you got family, right? What if you got other people who are now going to have to take these things over and operate these things for you, right? If you can't find a way to maybe have an influx of cash or have something to cover these huge expenses that pop up, right? In the once you pass away, and obviously, and this might sound like a conversation for people who are later in their lives. No, people, we see it every day. People in their 20s, 30s, 40s who are passing away, and it's just like, wait, how did that happen? And that's the thing. Another reason why I wanted to have this conversation with you, because it is very relevant in your overall financial planning. If you want to buy the home, right, you want to make sure you're saving money in taxes. What are you going to do with all this stuff, after you're done with it? Most of us want to pass it down, right, and keep it within our family. So we should probably think of ways to protect that. So what does that conversation look like for you now? How has that been with clients?
Yeah. So I tell my clients, listen, you have to borrow wealth until you reach it yourself. So, that's how I look at life insurance, is protecting what you're in the process of building. And, it's going to help you leave a legacy behind if you're, one, if your life is cut too short, or two, if, you have your children and you want specific things for them, you know, listen, death of someone you love is already enough to bear. It's hard. But imagine if you have to bear that death plus all the bills and the mortgage payments, the car payments, the tuition, and you have to bear that and deal with it and try to figure it out on your own, you know? And there is a total misconception of life insurance being for the older people. Actually, it's not. You should look to start it younger, because you're going to get a better rate when you're younger than if you're older. Older, you have less time, so that's more risk to the insurance company. But younger, and when you're older, you're also, your health is slowly deteriorating. So that's going to cause, you to pay more on a monthly basis than if you started, let's say, when you're 25, 30 years old.
Now, staying on that part about the health side, say somebody is trying to avoid, because obviously there's different types of insurance that people can get, right, guys? There's the term life insurance, the whole life, and some of them come with different tests that you need to go through before you can actually get a policy. And sometimes people might hear that and say, okay, well, I have some health issues, so before I even waste my time trying to get a whole life policy or a huge term life, maybe I'll just get like a quick final expense, that might cover $15,000 or $20,000. But then you go through like their needs and realize like, yo, you need 10 times that amount of money, right? 20 times that amount of money to even make a dent and save anything for your family. So is there any sort of like products that you're seeing or working with right now that help people, right? Like maybe like a no blood work kind of policy, that's kind of those kind of things?
Yeah, absolutely. Yeah.
Mm-hmm.
So our main focus is term insurance. We offer two types: one with a medical exam, and one without a medical exam. Depending on the state you're in, it's either going to be power and precision term, or it's going to be custom advantage and just regular term insurance. That's for like New York.
Okay.
Um, so yeah, there's one that offers a medical exam. They come, we send a nurse or a physician to your house, somewhere where you're comfortable. They'll run your vitals, check your weight, blood, urine, and then they send that off to the underwriting team, and then the underwriting team ultimately makes the final decision on if you qualify for the insurance that you're quoted, if there needs to be changes made to your policy, as far as death benefit amount, or maybe your monthly premium increases, or in some situations, if your health is really exceptional, you can get more coverage for the same price or even less of the price.
Mm.
Um, so yeah, we offer one with a medical exam and one without a medical exam. Obviously, the one with a medical exam is going to be cheaper because the underwriting team can take a full look of your history, of your current status. Without the medical exam, you may be paying a little bit more, but if there's something that you're a little nervous about, maybe you're a little overweight, or you know um, you're maybe some high blood pressure,
Mm-hmm.
you want to go with the non-medical exam.
And I
But
say
that's only
because
up to a
that's
certain point, because
people have that.
after $350,000 of coverage, you have to get a medical exam. At least that's how it is with us.
Okay. That's good to know, because like I said, that's going to give somebody some information. They're going to be like, okay, they may not have known, that they could go ahead and still get insurance without taking that blood work.
Mhm.
Because when I was, selling insurance at the time, that was something that was a very big part of the conversation. It's like, oh, I thought I would have to do all that, work, and a physician would have to come here and be like, nope, there are other ways. So
Exactly.
definitely want people to try to figure out what their way is, and then go ahead and make that a part of your conversation over these next couple of weeks when you go and map out the rest of your year. But, talking about mapping out the rest of the year, Dave, because like I said, I want to keep the information, you know, tight for the people and not draw out the episodes too long, anymore for them in this year. But I wanted to make sure we also focus on some actionable steps too that they can, take away from these things too. So as we're looking into, these next couple of weeks, so like I said, everybody's getting their W-2s, their 1040s back, seeing how much they made. What are some steps that you're telling them to take to really plan and get things organized to work with somebody like you?
Right. So first step is making sure that you get all your documentation together. I'm constantly having clients that'll send me something and will file their tax return, and then 2 weeks later they receive something else in the mail. So it's really important to just kind of recap, remember kind of the situations you were going through the previous year. I know we're working backwards, and our minds can get clouded, but it's really important. If you work multiple jobs, expect multiple W-2s. If you are a contractor for multiple companies, expect multiple 1099s. I know like Fidelity and Robinhood, they don't usually have their 1099s available until mid to end of February. So if you made any sales through your stocks or any trades, the 1099s are usually available around those times. I know Fidelity this year is going to be February 22nd.
Okay.
Robinhood is usually around the same time frame. So you want to make sure you gather everything up. And let's take an overall look at what you did last year. If there's any changes that have been made, you had a new baby, you got married, you started a business. Let's sit down and have that conversation, see how your tax situation is going to change, and we can start developing a plan through there. That's
I like it.
how I would recommend it.
You just reminded me of something too when you brought up stocks and crypto, because obviously that was a big wave that picked up the last 5-7 years, right? But now we have another wave that has hit us here in America, and that is legalized sports betting through apps directly on your phone. And if we're being honest, there are some people out there who are winning money and losing a lot of money.
Yeah.
And I'm thinking to myself, I'm like, is there any tax implications around this? Like, what does that look like? So perfect time to ask you, what are you seeing on that side with sports betting now? Because it has taken over the country. Every guy I know does sports betting.
It is.
Everybody got a parlay every week.
Yeah. Listen, I've never particularly participated in sports betting. I'm not keen on the
Good, stay away from it.
I keep hearing parlay, or I don't know, man. That's the sports, but it really has gotten crazy, especially when they opened it up in New York. Forget about it. New York is crazy with their sports betting. There's definitely tax implications. The winnings are income. You're going to receive a document from, let's say, DraftKings. They're going to send you a W-2 for your winnings, and you're going to have to report that on your taxes. And even if they don't send you any documentation, technically, their income. It's income, regardless if you like it or not. You're ethically supposed to report it on your tax return. Now, the upside to that is you can take an itemized deduction up to the amount of winnings that you have as losses. So not every gambler is winning every hand that they throw, right? There's going to be, after many, many losses, then you might catch a win. So let's say you have $40,000 worth of winnings for the year. You can deduct, as long as you pay that amount, up to $40,000 of losses. You can do it up to the amount of your winnings.
Okay.
Deduction. Yeah. So it's not all, not all the worst thing to report on your taxes, because like I said, you get the deduction for the losses, but it's still income at the end of the day. You have to report it as income.
Okay, that's good to know, because I was wondering, I was going to ask, like, what if somebody bet like $1,000, lost 800 of it, and walked away with 200, and then because it gets complicated, right? You start looking at it, it's like, well, I didn't really win that much, because at the end of the day, it all kind of balanced out, right? Like when you start looking at these numbers, guys, most people are losing, right? And at the end of the day, like I said, you might bet 1,000 over a year and then walk away with 1,100 that you took away, and it is not a huge profit that you're gaining, right? So when you're looking at that, it starts to get crazy too, like the stock side, and it's like, well, maybe I'll just not say anything about this because maybe the IRS ain't worried about me because I'm not making millions. There's other people for them to be concerned about.
Right.
But then you start seeing headlines like over the last couple of years where, oh no, they're hiring, thousands of more IRS agents and they're going to be cracking down on these things.
Yeah.
And now we got, the efficiency department. So guys, they're going to start looking for their money, right?
Absolutely. So it's mainstream. The betting is too mainstream. Exactly like crypto just a couple of years ago. It became super mainstream. It's in everybody's minds, everybody's mouth, and everybody's talking about it. So listen, there's no way to once it becomes mainstream, you best believe the government is going to want to put their hand in your pocket. There's no doubt about it. And that's going to come in the form of taxes and cracking down, whether if they're going to create departments for it or not, to handle those things. Then it's yet to be seen. But listen, they know about it. They know that you won that money. Remember, everything that gets reported to you gets reported to them first. So DraftKings is reporting everything to the IRS before they even issue you any sort of documentation. They have to get the green light from the IRS.
They're just sitting there waiting, like, oh, okay,
Yeah.
let's see if he calls.
Yeah.
Let's see if he picks up the phone. All right, you don't want to pick up the phone? Here you go. Here you go. We got you. We got you.
And they want their cut. They want their cut. And the same thing is, we've seen the developments of crypto in that same sense. Now even on the tax return, it asks if you if you received or if you sold any digital currency. Bitcoin is like the big example on the tax return, but it's mainstream. There's no more running. And listen, the government they have a huge deficit. We're in the trillions of dollars in debt. They're going to do what they need to do to cut that deficit down as much as possible. They're going to come for their money. Just doing everything the right way, reporting it the way it needs to be reported. That's your best bet.
Yeah, I think on our next episode we should probably dive in a little bit more into the management of like stocks and investing in that side of it too, because that is another side of the financial planning on the tax side where it's like you want to make sure you're accounting for those things. And I have a conversation coming up actually in a couple of weeks with Chris Gutnick, right, another one of our high school alumni. So he is going to be on. We're going to be talking more about financial planning and just, like I said, knowing how to make sure we're putting our money in the right places and just doing what we need to do to get better.
Yeah.
So,
and that's a big conversation I'm having with clients right now as well is, getting into the market. Obviously I've extended into life insurance, but I've also extended into investments. And we're showing people how they can start saving, create the three main accounts that they need to. That's their emergency account, their short-term account, and their wealth building account. We want to start obviously with the first one, emergency fund. A lot of people don't have any money set aside. Forget about retirement. If something went wrong today, they don't have the money to pay for it. And you know what that's creating? That's creating more debt for them, because what are they going to do to pay for those emergencies? They're gonna whip out their credit card, swipe their credit card. Now they have more debt. They're paying X amount in interest on a monthly basis, and it's sad to see. A lot of people don't have their financials in order. One thing that we're offering right now is we call it a financial needs analysis. That is a complete blueprint of your financial standings. We take into account your income, your monthly expenses, your goals. We even break down how we can help you get out of debt quicker and pay less in interest through a method called debt stacking. We show everybody the rule of 72, which is basically you divide the amount of interest your investment is going to bring you in, and you divide it by the number of 72, and that shows you exactly how many years it's going to take for your money to double. So we're teaching concepts like that.
Yeah.
We're showing individuals and families how to get into the market, where to put their money, based on their stomach for risk, their time horizon. For a financial plan, no financial plan is the same as somebody else's. Everybody
No.
has their own goals. Everybody needs a different amount than, let's say, their friends or family need. Every financial plan is different, and we're here to um, help you create the best financial plan for yourself.
I love that. Yeah. And I think it's so important to just, like you said, going over those basic principles for people, because like I said in the beginning of the episode, I think we kind of take it for granted because we're so deep into it. We're always reading these things, reading articles, researching this different topic, that topic, taking classes. I always see you, in different places, putting yourself just in places to learn, right, and get the information. So I think it's not that we take it for granted. I think we don't realize how much work still needs to be done when we now go back into the community and it's like, oh, now we need to keep having these conversations. Nobody knows what the rule of 72 is. Nobody knows these different type of savings buckets that they need to have to protect themselves from emergencies. What we know is I got $1,000 credit card. That emergency is $870. Great. Here's this credit card. Put it on there.
Right.
What do you mean I'm paying 28% interest now on that money that I just borrowed? What do you mean it's going to take me the next 10 years of my life to pay that off? I just needed some tires.
Right.
I didn't know it was going to be that serious. I didn't know tires were going to take me the next 10 years of my life. This is what happens, right? I've seen enough of it in the bank. I've seen enough of it in my own life of just making mistakes and saying, if we just had a better understanding about what we're about to get ourselves into, we probably would have made better decisions early on, right? So my hope always when we have these conversations is to connect with somebody who may be right there in the beginning stage and saying, okay, let me take my first step of whatever I'm about to get into, but let me do it with some caution. Let me do it with some advice. Let me do it with the experiences of others so that I can make better choices, right? So then it continues to compound. You were talking about debt stacking. Let's start stacking some better choices, right? And then making improvements over and over and over, because it's going to take time. But it's better if you're working over that time with better advice and better information. So, that's kind of what I want to sum it. Any final words? Yeah.
And that's definitely a great summary for what people need to take the right steps, and also don't be afraid to look for the advice. And social media is not where you're going to get your advice. Yeah, there's some good information out there, but there's also a lot of misinformation out there. I just heard of the new one that was going around. I got called. I couldn't believe I was receiving calls and questions about Trump saying that anybody that's paying child support, if you're receiving child support, you can't claim you're dependent. The person that's paying the child support, that was made up. That was made up. There was nobody ever said it. He never said that. Never came out of his mouth. But that's the dangers of social media, is that things travel like wildfire. And I couldn't believe that I was receiving calls, and I don't want to call people naive, but I guess we'll call them wishful thinkers. Just that whole situation just didn't make any sense to me. Why somebody would do something like that, and I was shocked that people actually believed and
But that it just goes like we were just saying, people don't know what they don't know, right? And they'll just get caught up on the initial clickbait, the initial headline, and say, Did you see what happened there? And I'm like, well, let's look into this a little bit deeper, right? Because we got to do our research. We can find some more information around this. But a lot of us we don't make the time to do that. So we do just get caught up on those things, and then we just run with the fear of what if, right? And that fear of what if is crippling, because you just get stuck in I can't even navigate now because of all this craziness that I'm hearing about. And I hear that about so many different things. I'm just like, yo, we gotta stop at a certain point. We have to stop, right? And like I said, just turn off the clickbait, listen to the longer form of that conversation, and really see what it is that they were talking about as a whole, right? Because it might not be what you think it is. But talking about longer content, we have a content rec of the week every week, right? So this is where we talk about maybe movies, shows, books, things that we might have been checking out, podcasts, whatever it is. And, I love to talk about this every week. So you got anything to share with the people?
Yeah, man. I am in love with Market Mondays by Earn Your Leisure.
Yep.
Such great
There
conversation.
we go.
They really kick out some. I mean, the three of them. I don't know all of their names. I do tune in. I've been tuning in for the last few weeks. But they kick out some really great information. It's fun to see their guests and to hear more about the market. They had Josh Brown
Yep.
a few weeks ago, and it was fun because I like how Josh Brown explains things. I like how down to earth the guy is. I actually went to an event that he threw in the Nasdaq about like 2 years ago. I went to.
Gotcha. Okay.
Yeah, he did a podcast. He was shooting a podcast there, so I was part of the audience. So it was nice to see him on. But no, Earn Your Leisure and Market Mondays is amazing. I love tuning in. I don't usually tune in for the Wednesday show that they do. I feel like though it's a little bit more what's the term? More
The blackout series, a little bit more risque. Yeah.
it's more like
on edge, just
yeah, it's not much about the markets. It's more
definitely not. More pop culture.
That's what I was looking for. Pop
Yep.
culture. So, I don't really tune into that one, but I do plan to go to Invest Fest this year.
Okay.
Yeah. If people, listen, and
we might see you down there. Me and my brother were just talking about planning a time to go down to Atlanta, so that would be.
Let's try to work something out and to get a group together and go to Invest Fest. I
love that.
Fun, so it's
neither have we. We've thought about it though the past couple of years, and so this might be. I like that actually. I'm gonna look into that today.
Yeah, and in June usually Forbes throws an investors event. It's called Iconoclast. I've been to that.
Okay.
It was quite the experience. The 1 year that I went, it was 2 years ago. The 1 year I went, the second day was like a surprise day. They had Tony Robbins moderating the event, which that blew my mind because I'm such a big fan. And they brought us down to the floor of the New York Stock Exchange. So it was a once in a lifetime situation. So
that's cool.
People just need to, go out, go on webinars, go to seminars. There's a lot of great information out there for you to tune in. Don't feel like it's so boring. Learning is honestly fun. I love to learn. And I've said this on your show before. I really, truly love to learn. I love to expand my mind. There's a lot of great connections that can be made through networking and going to these events. I've secured clients by going to some of these events. So, you take away a lot. You take away a lot for your business. You take away a lot for your personal growth. So, if I can make any recommendations, it's read, listen to podcasts, go to these seminars, hop onto these webinars. There's a lot of free ones. There's a lot that are inexpensive, but the knowledge that you gain is priceless.
Yeah, and I'm happy you brought up the webinars too, because that is something I am working on right now to launching this year. Bringing on people like you. So I'll definitely talk about that more with you off air, right? Because I have some details that still need to be ironed out. But that is something I want to start doing. Having webinars where we can invite people, maybe a small group, maybe like 10 to 15, 20 people, and have them have a virtual way where they can just, tap into this information. They don't have to leave their home. They don't have to leave where they're at, and just be able to have an open conversation with us, right? A nice open floor Q&A, and get that direct information so that we can get them, towards those next steps. So I'll talk about that more with you in a couple of days. So we'll go from there. But
I love the idea, man, and I wish you, much prosperity on the process.
Appreciate it. And my quick content rec for the week is On Call. Now, this is a show that is on Amazon Prime. It just came out a couple weeks ago, but it's produced by the same guy who does Law and Order, SVU, Law and Order, Organized Crime, FBI International, all those shows, Dick Wolf. He does all of them. And when I saw this one come out, I didn't know it was produced by him at first until I saw the credits rolling at the end of the show. And I'm like, this guy got another show. There goes another multi-million dollars for him. But basically the show is set in LA, right? And they are dealing with gangs, rioting, like everything that we see in the news nowadays. They do a really good job of kind of like taking those stories and things that you would see and making it a little bit more dramatic for the show. And anybody who knows me knows that I love those type of shows. I've seen everything that he's done, right? So going back like 15 years now, when we were in high school, I've been watching his shows.
Wow.
And so he is doing it. He's doing the same thing with this one. And like I said, anybody who's into, that cops and robbers kind of thing, chase them down, run after the gang life type of shows, it is something that you need to tap into. High intensity, short episodes though, about 25, 30 minutes each. So you don't have to sit there for too long, and just really good content. So check it out. Let me know if you guys are already watching it. I love it. I'm probably halfway through the first season now. So yeah, that's my recommendation for the week.
Beautiful.
But
I love
David,
it.
thank you again for joining me. Like I said, I want to keep this in a nice timeline for the people. So guys, I hope you enjoy this episode. I'm going to be bringing you more episodes like this, especially with David, as we do the webinars that I talked about, diving into some more specific topics and giving you guys the floor to ask some questions, because we can't fit everything into this, 50-minute now conversation that we've had, because there's just so much out there, right? And like you said before, the information that you're hearing may not apply directly to you, and you may need to be able to ask, okay, based on your situation, what should you do? And that's the type of room I want to be able to create for us going forward. So, David, like I said, thank you again. Guys, thank you for listening. And until next time, stay tuned, stay curious, and as always, enjoy your first sip.